Craig, thank you for joining me.
Yeah, Jordan, good to see you.
Good to see you. This is kind of bittersweet. Potentially, you never know, we might do more, but potentially our last segment within the Prevail Pro Tip series.
I know it is. It's been a lot of fun though.
It has been fun, and our final topic, not to bring doom and gloom, but it's something that we obviously we have to address, is long-term care in chronic illness.
Yeah.
And this is something that I know a lot of people my age are not really thinking about.
Right.
Like especially for themselves. But I do know that everyone has had experience with this. Everyone's had, me personally, I've had loved ones that have needed to receive long-term care. And there's not only significant impact on the finances of the person receiving that care, but a lot of times there's implications on family members' finances as well. So I just wanted to get your thoughts and see if we could go into a little bit more detail on how we can shelter ourselves from really that financial burden that you never know. It may happen, it may not, but why not create some protection there?
Yeah, no, it is. It's a really important topic. It's a major concern for many. I would totally agree. It is probably not on the radar screen for those, in the 25 to 35, 40 age range.
Yeah, a little out of sight, out of mind at this point. But
we actually start to see this conversation creep up starting around 45 and obviously kind of extending into 65. But whatever the case, it's a reality that the rising healthcare costs can be a major headwind to insulating, preserving wealth, preserving assets. I mean, personally, I've seen both my grandmothers have a need for long-term care. One was on physical ability, the other was on mental capacity. And one actually had some care and was in a facility. The other, we were fortunate enough as a family to take care of her at home because she didn't have the assets. She didn't have the protection, and we didn't really want to do in a medical facility. So it's a real issue that I think at some level or another we're all gonna face, whether ourselves or with others that we love.
Absolutely. And in preparation for the call, I saw an alarming statistic that 52% of people turning age 65 will need some form of long-term care services in their lifetime. So the cost of that care will cost between $150,000 to $250,000. Yeah,
it's amazing. In fact, if you actually look at, again, dementia, and that was a little close because one of my grandmothers had dementia, that cost can rise up to $350,000. I mean, it's an enormous amount of money. You're right.
So how can we protect ourselves against some major pollution in the future if this happens?
Right. Well, outside of an anti-aging drug, it's really all about transferring risk, and I think it's a decision that we all face when we look at any type of insurance. How much do we want to self-insure? Obviously, you and I know that we work with clients that have enough assets that they can do that. Others don't. But it's still always a question of whether you want to self-insure or transfer that. Traditionally, long-term care, true long-term care insurance is a great solution. The one biggest limitations, or I guess negative components that we, of course, hear is that it's very, very expensive, which it is. And the other aspect is that premiums continue to rise. If there's anybody listening that has long-term care or parents or whatever, they've probably seen the premiums from a renewal standpoint continue to go up.
Right.
That's a major issue, because if you're one of the lucky ones and you don't need it, the fear is then I've spent all this money and I've kind of lost it. And unfortunately, then that forces decisions that maybe they choose not to get covered. And that can be a problem. So as a result, what we found, what we recommend is other solutions, that it's not a use it or lose it. In fact, there are actually life insurance plans that allow for the death benefit to actually be paid out early, to be accelerated for chronic illness, long-term care services, so that you don't have to die to receive a benefit. In fact, one of my colleagues says you just have to die a little to actually receive the death benefit. But with these plans, they're triggered exactly the same way as a traditional long-term care, which is in the industry, you can't meet 2 of the 6 activities of daily living, which, okay, you can't bathe yourself, feed yourself, transfer, et cetera, et cetera.
Yep.
So if you get a doctor to validate that, you can accelerate the death benefit up to a certain portion based on the amount, et cetera, tax-free. And what's also interesting, and I think it's a huge benefit, is this isn't an expense reimbursement. It's an indemnity, which means that you have the flexibility to use that benefit however you want to use it, for family care, for facility care, home health care, again, family member, whatever it is.
Sure.
So I think that, and then whatever's left over is certainly going to pass, obviously, to your heirs. So again, you don't have this use it or lose it situation, and it's just a great solution to leverage current dollars to a greater return, transfer the risk of LTC, and ensure that one way or another, a benefit is going to get received and paid.
Craig, thank you so much for going into detail on that. It's an important issue that we have to address, and like you said, we really don't want to go down the rabbit hole of a solution where we're putting a bunch of money into potential care that we may or may not need. Right. So that's fantastic.
Absolutely. Well, thanks again. It's been a pleasure, Jordan, and hopefully at some point we'll do one of these again in the near future.
I hope so, Craig. It's been awesome. Thank you so much.
Take care.
All right.